Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this week's free educational presentation, where today I want to talk to you about the very first strategy I ever learned. This was a method I learned going on nearly 5 decades ago, and I continue to use to this very day. In fact, I used it this morning. I had one small profit this morning trading it. Now, here's the good news about today's educational class. I'm going to actually give you the very first two rules of this method. Now, this strategy only has 4 rules altogether, and you are going to get the very first two of this, and you'll see how powerful this is. For example, take a look at this chart here in GILD. Someone looking at this would say, well, we're in an uptrend, Steve. We're going up, so I guess I've got to be a buyer. But then how many times have you seen this happen? All of a sudden, it changes direction, and you say to yourself, well, wow, I guess it's not going up. I guess we topped out, and now it's in a downtrend. So maybe I should stay on the sidelines, or maybe even perhaps be a seller. Well, the first rule I'm going to give you today actually would have told you that the overall trend is up. And with this method, if the overall trend is up, we're only going to be a buyer. Now, with the second rule, you would have automatically known that the short-term trend is up. So when you provide these two things together, you have like a synergy for success and consistency. Now, these are the first two rules that made up this method, and eventually they actually generated a buy signal right here. So where you thought maybe we were in a downtrend and you should avoid this, look what happened. The stock actually gapped up the very next day after you would have purchased, and potentially you could have captured upwards of 25 points. So this is what we're going to be talking about, the very first strategy I ever learned and continue to apply to this day in my own personal trading, as you can see how powerful it is. So welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. If you are new to my free weekly webinars that we have usually on every Wednesday at this time, well, you'll find out that we're a little bit different from other webinars you may have attended. In fact, if you've come here today thinking that I'm going to tell you what I think the market's going to do, is it topped out or is it going to go higher? Or if I'm going to tell you what the perfect stock is to buy, that is something that no one else is looking at and we think you should buy this, or the stock you should be selling. Or perhaps you're wondering about what the perfect time frame is, or the perfect bars you should be looking at. We've come to the wrong place, because our whole philosophy is based around educating you so that you can decide those things. You see, if there's one thing I've learned in nearly 5 decades, it's the reason why most traders fail is because you're giving your power away. You allow someone or something else to make your trading decision for you. Now, I know a lot of you would say, no, I don't do that, Steve. I have a strategy. I base it all on, what the market is doing. But really, are you basing it on the market is doing? Are you listening to some guy also in a chat room or in a blog that you're reading to help you come up with these decisions? Are you basing it off of interest rates, or off of earnings reports, or off of economic policy announcements? Okay, because if you are, those things are still determining whether you should buy or sell. See, my mentors taught me, even though I was based, all my trading was based on the same things that most likely yours is based off. They saw how much I was struggling, and they taught me, they said, Steve, listen, these things are what is not keeping you consistent. They're actually keeping you away from consistency. So once I decided to let go of all these things that really were helping me decide, and just focus on the market in front of me, on the chart in front of me. I mean, after all, that's the source, right? Well, that's when my trading started to turn around. And luckily, it's been able to sustain me now for nearly 5 decades. So this is what I do. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. So what I do is I teach all of my students around the world in over 115 countries and in every state, all the things I've accumulated and that I personally use in my own trading. But once again, this is not a system where everyone buys at the same place, everyone sells at the same place. This is an educational company. So we work with you and give you different variables so that you can decide how you want to apply this. So this is what I feel is the cornerstone behind all of our education. It's really providing you with things that have stood the test of time, but then working with you so that you can decide how you want to apply it. In my opinion, this is the only way to become a consistent trader. So before we begin today's class, let's take a look at our disclaimer. We're required to share this with you, so please take a moment to view it. I'm going to show you a lot of performance results by providing you and displaying the first two rules of this method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are, first and foremost, an educational company, All examples are strictly for educational purposes only. Now, I see a lot of new names in our participant list here that have never attended before. If you'd like some more education on a daily basis, well, feel free to follow us either on X. As you see here, there's our handle right there, abbreviation for specialist trading. You may want to copy that down, at SPCLST, TRADG, because every day I post between 5 and 7 different snapshots of signals our methods have generated, or little bits of financial wisdom. Or you can also subscribe to us on YouTube. This is being broadcast right now live on YouTube. So if you want more content along those lines, please hit the subscribe button if you're watching us through YouTube, and we'll have a lot more content for you. So different ways to follow us and to get more free education. Okay, with that stated, let's begin today's educational class. And we're going to be talking about the method that I've been trading now going on 5 decades. That is strategy number 4. This was something my mentors taught me and I continue to use to this day. Let me share with you some of the highlights of strategy number 4. It's a pattern recognition strategy. So what does this mean? Well, it's not based on any fundamental news. It's not based on earnings or jobless claims. It's not based on any type of, higher lows, lower lows, or whatever the technical analysis 101 you're watching, not based on overbought, oversold conditions. It's based on a pattern that repeats itself over and over again in virtually any market and in any time frame. Now, it's designed for traders looking to catch these quick momentum moves. Now, when I first started using it on the floor some 48 years ago, well, I was getting in and out using strategy number 4 in a matter of minutes. I buy something and sell it a minute later. But we've developed ways to stay in the trade much longer than that. If you'd like to stay in it days, weeks, even months, you can do that. Very simple. And it only uses one indicator. And I'm going to share with you what that indicator is because it's in one of the first rules that you'll be learning in today's class. Now, the advantages of trading strategy number 4. Well, firstly, it's extremely consistent. Now, most people have the incorrect definition of what consistent means. When they see that I say, oh, it's very consistent, they say to themselves, oh, that's great. I'm going to become a student because that means that almost all the trades are winners, right? No, that's not what consistent means. Actually, consistency is an awareness that you will have losses, and that's okay. Because a good consistent method is one that's able to recoup those losses, oftentimes on the very next setup. So what you want in trading any method, doesn't matter if it's one of mine, could be one of yours, could be something you purchase somewhere else, is consistency, meaning you have a 2 steps forward, 1 step back approach. How many times have you heard or seen these ads on the internet or some guy in a presentation saying, we've gone back and back tested this in the last 20 years, we've only had 2% losses and the results are phenomenal, okay? I would run away from those things because every good trader I know has losses from time to time. That's fine. That's like saying you want to play a sport, say basketball, and never miss. All of the best basketball traders miss all the time, but it's their consistency that makes up for it. It's the same way with trading. Sure, I had a loss yesterday, and my very next trade, I was able to make it back and some more. That's what you're looking for in a consistent method, a 2 steps forward, 1 step back approach. The trouble is with other methods, they promise the world, and every once in a while, they may hit a home run where you say to yourself, wow, this is phenomenal. I just made so much money on this one trade. Well, that's great, but most likely those trades I've heard from students around the world have had purchased, fly-by-night methods like that, or even myself when I first started trading. I would normally have a great trade and then give it all back. 2 weeks later, all the money I made was all given back to the markets, and now I was even in the loss column. So you want something that is a nice upward, steady upward rise in your profit and loss chart. Another advantage is that it makes you a part of the process. Remember, we don't believe in everyone trading the same way. No 2 traders should ever trade the same way. This means that you have to be a part of the process. If you're the type of trader that doesn't like a lot of risk, well, then perhaps you use one of the stops we teach you that has less risk. Let's say you're a trader that has a $500,000 trading account. Well, then you can afford to take on more risk. So then perhaps you use one of the methods we teach that has more risk included. Let's say you're the type of trader that wants to trade 50 times a day. All right, well, we'll teach you an entry that's designed for that. Let's say you only want to trade once a month. All right, we'll teach you how to do that as well. You see, everyone should trade according to their own means, but this means you have to be a part of the process. You can't take yourself out of the game and say, well, I'll let someone or something else decide for me. Remember, that will only lead you down a path of losses and inconsistency. And lastly, the best thing about Trading Strategy 4 is that it's designed to be as simple as possible. There are only 4 rules to this method, and I'm going to share with you half of them. And you'll see in just a few seconds how simple they are. In fact, you're going to say to yourself the same thing I said when my mentors taught me, was that this is too simple. It can't work because it's too basic. I mean, why isn't anyone trading this? Well, for some reason, we're all taught that the more complicated something is, the more valid and more successful it will be, right? The more indicators you have on your screen, the more convoluted logic you have, well, you're going to be much more successful. Well, if there's one thing I've learned, it's that it's the opposite. It's actually the methods that are the simplest, the ones that have the most basic and simplest of rules are the ones that are the most consistent. So the good news is strategy number 4 is extremely simple, therefore very consistent. Okay, so let me share with you the rules to strategy 4. These are rules number 1 and number 2. Remember, there are only 4 rules altogether. And don't worry if you don't copy these down and say, wait a minute, I didn't get that first rule. What was it again? Most likely you will because it's so simple. But this is being recorded, and each and every one of you will be sent a link to this recording where you can watch it at your own leisure. So if you can't copy it down, you don't have a pencil anywhere near, don't worry. You'll have a video of this, and you can watch it as often as you'd like, okay? All right. Rule number 1. If strategy 4 generates a buy signal, it can only be entered above the 50-period simple moving average, okay? Very simple, right? And conversely, sell signals can only be entered below the 50-period simple moving average. So what is the big deal about this? Why do we have to only buy above and only sell below? Well, because the 50-period moving average is what we call our buy-sell line. Basically, it tells us whether we should be a buyer or a seller. And we have found over time, since I started using this some 5 decades ago, that if price is above the 50, that's telling you the overall trend is up. And if the overall trend is up, we only want to be a buyer because we will increase our odds for consistency. Now, conversely, let's say we get a buy signal, but it's below the 50-period moving. Does that mean it's not going to work out? No, it may be one of those aberrations where you have a really nice trade to the upside. But just like the slot machines in Vegas, those type of, nice little bell ringing wins will not last. If you have a jackpot in Vegas at the slot machine, well, it's designed, the machine is designed to keep you there, because if you keep doing it over time, you're going to give all your money back. It's designed to do that. It's the same way if you buy below the 50-period moving average and sell above. You're out of sync with the market, and if you keep doing that over time, you're going to give it all back. Trust me, take it from someone who knows. That's the way my trading used to be some 5 decades ago. I would have a really nice trade, then I'd give it all back. Now, if you don't believe how powerful this simple rule number 1 is, go back and look at your last 10 or 20 trades. And as I always say, I can almost guarantee the reason why you had losses was because you were out of sync with this simple rule number 1. Your buy signals were below the 50-period moving average, and your sell signals were above. Now, when we say sell, we don't mean you're already in a position and you have a sell signal and you exit. It's not the same as an exiting signal. A sell signal means you're betting for whatever market you're trading. It could be futures, could be a certain stock, it could be an ETF. A sell signal means you are betting that it's going to go lower. You're shorting it. So if you get a sell signal to short, to bet that something's going lower, it can only be below the 50-period moving average. Obviously, if you're in a trade and you're making some good money, it doesn't matter where you exit. You can exit wherever you like to take your profit. So let me show you here on this generic chart what this looks like, and you'll see how powerful this is. All right, price is above the 50-period moving average. So what is the market telling us? Not me, not some guy in a chat room, or not some guy writing a blog. What is the source of what we're trading telling us? The only thing we should be taking our answers from. It's telling us the overall trend is up. And if the overall trend is up, we want to be in sync with the overall trend. Therefore, we will only be a buyer. Conversely, where is price in relation to the 50-period moving average? price is below. So once again, ask yourself, what is the market telling me? Not some guy on TV, not some earnings announcement that just came out. What is the market telling me? Tell me the overall trend is down. And I always want to be in sync with the overall trend. This will increase my odds for consistency. So if I'm in sync, I will not take a buy signal. No matter how good it looks, I will only look for sell or shorting signals. All right, that's rule number one. Very simple, right? Here's rule number two. Buy signal bars must close in the top 25% of their range, and sell signal bars must close in the bottom 25% of their range. All right, so what does this mean? Well, if you look at any bar chart, doesn't matter if it's candlestick, open, high, low, close, it makes no difference. But if you get a buy signal, if you're above the 50-period moving average, you must close in that top 25% of the range, from extreme low to extreme high. Just divide by 4 separate but equal parts. And if you close in that top 25%, well, then it's okay to take that signal. That's rule number two. Conversely, if you see a bar that's below the 50-period moving average, you divide it by 4 separate but equal parts, and it closes in the bottom quarter, well, then that's a valid portion of the rules for the sell signal. But you have to have these two rules in place in order to buy or sell. For example, once again, we look at that generic chart, and we close in the top 25%, we're above the 50, and price went up. Now, we had a sell-off here, and this is where most traders say, well, Steve, I could have sold right here and made good money on this. Well, sure, but you would have had to be very quick, gotten out of one day, because look what happened the very next day. Went right back up, closed in the top portion of its range, and look what happened. Had you not taken your profit very quickly, you would have lost a lot of money holding on to that short. Isn't it much more conducive to be consistent to only look for buy setups? Same thing, we are below the 50, so the overall trend is down. We have a bar that closed in the bottom portion of its range. The range would be from extreme high to extreme low. Divide it by 4 parts. If you close in the bottom 25%, well, then that's the second rule that needs to be met in order to have a sell signal. And look what happened after that, okay? Once again, if you had bought here thinking like, well, Steve, it went up. That guy on TV says it's going to go up much higher. Well, what happened to it going up much higher? You will have the current at your back, all right? You will be swimming with the current at your back instead of upstream if you're in sync with the 50-period moving average. Okay, those are the first 2 rules of this strategy that I continue to trade, and you can see how simple it is. I can't give you the remaining rules that make up all of the requirements, because that wouldn't be fair to our students who own and have purchased this strategy around the world who I've taught this to. But you can just see how powerful it is, and I'm going to show you a lot of examples using strategy number 4, and you'll be able to see these 2 rules in action. Now, here's what I'm going to do. I developed a platform with ProTrader strategies, and we designed it to make trading simple, first of all, but also to auto-identify these strategy 4 signals on their own. So even though we teach you what to look for, this is not a black box. You know all the signals and what they're based off of and all the rules. It takes everything into account. You don't have to divide a bar by 4 separate but equal parts. It does that already for you. You don't even have to plot the 50-period moving average. It already automatically knows if price is above or below. So you'll see how it auto-identifies these signals, and we made it really simple. All right, let's look at this chart here in ABBV. Can't really tell much. We're only looking at 3, 4, 5, 6, 7 bars, right? Someone would say, well, Steve, how can I even decide what's going on? There's not enough information here for me to really figure out. Well, click on Strategy 4. In the drop-down menu, you'll see signal arrow. And it will automatically identify if a signal is taking place. And as you can see, yes, there was a buy signal right there. Now, you don't have the 50-period moving average, but you can see that it closed in the top 25%, and it automatically took into account that it's above the 50-period moving average. So there's nothing for you to do. You know the rules, but it's just verifying. And look what happened. Stock went up 25 points after that. Now, here's a very typical market, what we call a sideways market. We're always taught to avoid these, right? Because this is where you get whipsawed. The minute you buy, it goes lower, and you sell, and it goes right back. So you buy up again, and most likely it's going to go lower. So you say, I'm going to stay away from this, right? This is where I'm just always at the wrong end of the chart here. Well, is it really a sideways market? This is once again why we normally fail as traders, because the first rule is we want to see if it's above or below the 50-period moving average. And then the second rule is we want to find bars that close either in the top or bottom 25%. The good news is that Strategy 4 will auto-identify this for us on the platform. All you have to do is click on Strategy 4 right here in the drop-down menu, click on Signal Arrow, and it will tell you if there is a signal or not. And guess what? There was right here. So obviously we are below the 50-period moving average. And obviously, as you can see, we closed in the bottom 25%. So where everyone else thought, well, this is a sideways market, I'm just going to avoid this. There's no real advantage to this. Guess what? Strategy 4 told you in advance to sell, and the stock fell in the next week or so 50 points. Remember, this is not based on any news, not based on any announcements. The market tells you just about everything you need to know. The only trouble is we're never taught to listen to the market, the chart in front of us. We're always taught to listen to some guy on TV, some economic announcement, some guy writing a blog. I used to do the same thing 5 decades ago, and it didn't make me a dime. It wasn't until my mentors taught me to let go of all that stuff, that what they called useless noise. And once you let go of that and keep your trading simple with just a few simple rules, that's when you'll become consistent. And it was hard for me to do because I had always taught like, hey, no, I'm supposed to know the earnings of all these stocks. I'm supposed to know what the direction the company wants to go. I'm supposed to know about jobless claims or money supply. But once I finally let go of that, then I started to become consistent. So I'm happy to say I haven't looked at any news. I never look at news. I haven't looked at any earnings reports or announcements, any jobless claims or things of that nature. I don't even know what they are. I haven't looked at any of that going on 5 decades. And if I'm still here, well, I'm proof enough to know that you really don't need it. Now, if you absolutely can't cut the umbilical cord and need to look at that, well, by all means, go ahead. I'm not here to tell you what not to do. As a mentor, my job is just to share with you things that I know have worked because I use them myself. All right, let's look at another example here. Here's what we looked at in the beginning. This was GILD, going straight up, then straight down. Hard to figure out what it's doing. Well, the platform automatically identified a buy signal right here at that low, closed in the bottom, I should say top 25%. And look, it gapped up the very next day. So obviously some news announcement or something caused it to gap up like that. Isn't it funny how we knew a day in advance? Here's another example, okay? We can look at this stock right here. Actually, this currency pair. This is a 4-hour chart of the British pound. Okay, looks like we're in a downtrend, right? We're making lower lows, lower highs. But once we apply strategy 4, we see, nope, 2 buy signals were actually generated. So where the first one you could have taken, nothing much has happened yet. Now you have another chance to get in. And then 175 pips in a couple of days. That's $1,700, $1,800 per unit. Potentially you could have captured in just a couple of days. This was a 4-hour chart of the British pound. Here's Apple, okay, an older chart of Apple. This is when Apple was in a nice uptrend, right? Looked really great. So you say to yourself, well, Steve, come on, I've got to buy this or stay long this because I'm currently long and we're in an uptrend. Look at it. The highs are higher, the lows are higher. This is classic 101, right? So you decide to stay long, and then look what happens. Something happens and it breaks down, and you say to yourself, well, you know, that guy on TV says to buy it, it's a buying opportunity. So you buy some more and buy some more. And at this point, you say to yourself, oh my goodness, I've got to sell, okay? This was just last month. But if we applied strategy 4, we would have known a full week or so in advance to exit. So if you were long and you don't like to go short, you could have used this as an exiting tool and saved yourself a 50-point loss. Now, if you're more aggressive and don't mind shorting or buying puts, well, guess what? You had a nice profit potentially you could have captured. Let's look at AMT, okay? In hindsight, someone looking at this would say, well, gosh, yeah, Steve, it's easy to see that we should have bought this because it's been going up in a nice upward fashion here, but how would I have known in advance? Well, you apply strategy 4, and look at, we had a buy signal back here when it was just going sideways. And you had a nice profit. And then on the sell-off, another buy signal, and then another buy signal. So you had multiple chances to take advantage of this. One of the worst things traders do is they love to play the victim game. I know I did when I first started trading. You always want to blame others for what you missed or for what you weren't able to do, right? Some guy, makes it big in some market. It could be crypto, it could be stocks, futures, and you say to yourself, gosh, how come I never get to get big hits like that, right? Or how come I didn't see that? Well, once you learn these simple rules, like the 50-period moving average and the top bottom 25%, you won't have anyone else to blame anymore because you'll have full access. You'll see this happening in front of you. So you have to take responsibility for your trades. But once you do that, you don't have to thank anyone else because you're doing it yourself. If you have a winning trade, you're the one who's responsible for it, not some guy in a chat room or a trading room, or not some system you spent $20,000 for. You're the one who did it. That's the way trading should be. Okay, AON, we had a sell signal generated here. Even though it looked like it was going higher, we are obviously below the 50 because a sell signal would not be generated. And as you can see, we close in the bottom 25%. 55 points it fell in a little over a week, okay? Here's an example in Costco. Here's a daily chart going back to coming into February, March. Buy signal was generated, 110 points. The stock almost went straight up after that signal was generated, okay? Once again, we have another sideways, or what we call a range market. This is what we're taught to avoid, right? Because we can't make any money off it. If we buy up here, it goes down, we sell, then it goes back up, we buy, it goes back down. So just avoid these range markets, right? They're whipsaw markets, can't make any money. And plus, Steve says always to listen to the market, to look at the chart. Well, the chart is telling me it doesn't want to do anything. It just wants to go sideways. So if I'm going to listen to the chart in front of me, it doesn't know what to do, so I'm not going to get involved, all right? Well, you're halfway right. But what's the first thing we do? We apply the 50-period moving average, and we look for that pattern. And look what we found here. Here was a sell signal and another one. So obviously we are below the 50-period moving average. Remember, it's always auto-generated and factored in on the platform. And so it may appear that we're in a sideways range market, but it's a selling opportunity because look what happened. The stock fell 60 points coming into about a month or so ago. That was in NXPI. Once again, looking back in hindsight, this is the Swiss franc for all you currency pair traders there, all right? Traders love to play the victim game and say, gosh, I was long this. Some guy in a chat room told me to buy the Swiss franc, and I've lost so much money holding on to this. Why? How would I have known? Well, obviously, we're below the 50-period moving average because two sell signals were generated. Now, if you didn't want to go short, you could have used these to exit and saved yourself roughly about 900 pips. That's thousands of dollars you could have saved yourself simply by looking at strategy 4 and applying it as an exiting tool. Okay, let's look at a weekly chart. Here's an older chart going back to last year in Tesla, okay? Not a current chart, but just for educational purposes, we'll go back and look at this weekly chart. So each one of these bars is a week, all right? A buy signal was generated. We closed in the top 25%, and obviously we must be above its 50-period moving average because we wouldn't generate a buy at all. And look what happened, 165 points in just 2 months. So obviously Tesla went down after this, but you had 165 points to work with. Now in our course, the Strategy 4 course, we teach you upwards of 6 or 7 different ways to exit. And I'll share with you one of those ways in just a few minutes. But some of our traders like to get in and out quickly and say, well, listen, I just want to make a quick 20 points. I'm out. Others want to get as much bang for their buck. And we could show you how to do that. But it goes back to our philosophy. You are in charge. It's not our job as a mentor to tell you exactly where to buy, exactly where to sell, exactly where to place your stop. Those are your decisions. Don't take yourself out of the game. The good news is that's what we provide. We share with you all these different ways so that you can decide. If you feel comfortable entering a certain way, then that's the way you should trade. If you feel comfortable exiting a certain way, then that's the way you should trade. The problem is most of us just blindly follow what some guy says on TV or in a chat room, and we may not feel comfortable doing that, but we say to ourselves, well, I guess he must know what he's doing. He's made a lot of money, right? So it must be right. Well, I don't care how right someone is, even if they do make a lot of money. If you don't feel comfortable trading that way, you won't be successful because you'll second guess the system or the strategy. You'll say, well, gosh, I can't buy this many times in a row. I'm bound to lose, right? So I won't take this trade. And then that'll be the one that makes tons of money. and then you get in again, and then that's the one that loses a little bit, and you say, oh, I can't trade this. And you'll always second guess. You have to trade where you feel comfortable, and we teach you how to do that. Let's look at Lulu right here. Once again, going sideways, right? But we must be below the 50-period moving average because a sell signal was auto-generated along with closing in the bottom 25%. And it immediately fell 55 points. So if you were going short or bought the puts, well, you had 55 points to work with. And then all of a sudden it bounced up. Did it bottom out? Does that mean now that it's okay to buy? Well, apparently not, because we are still below the 50-period moving average and another sell signal was generated. Now, do you remember what I talked about in the beginning where I said strategy 4 is extremely consistent? Remember, most traders think when you have a consistent method, that means it makes a lot of winning trades, right? It makes a lot of wins. No, that's not what it necessarily means. Consistency is an awareness that you may have losses from time to time. For example, if you had sold on this second signal right here, look what happened. It went up, and just using one of our basic generic stop placements, you most likely would have lost 10 points, okay? So is it time to say, well, this doesn't work. I'm going to throw this out the window. I wasted my money listening to that Steve Primo guy. This stuff doesn't work. No, because a consistent method is one that's often able to recoup its losses on the very next setup. So you got to get back on your horse, because look what happened. Another sell signal was generated just after you were stopped out. And guess what? That one potentially captured 95 points. So do you think you would have had enough room to make back that 10-point loss you had? And maybe some more after that? This is a perfect example of what we mean by consistency. All right, let's look at Meta. Here's an older chart of Meta from going into last month. We'd be in an uptrend, right? Once again, this is an exact uptrend definition, right? Well, if we click on strategy 4, click on signal arrow, nope. It generated a sell signal automatically, so we must know we are below the 50. We closed in the bottom 25% of its range. Remember, if you don't have the platform, you'd have to do that manually, divide by 4, and say, okay, we close in the bottom, take out your hand calculator. Well, the platform does it for you automatically. And then the remaining 2 rules are met as well. So the remaining requirements would be met. And so it automatically identifies a valid sell signal. And look what happened, 120 points in the next week or two. Not a bad little trade, right? Well, look what happened after that. Okay, here's what most trading rooms and chat rooms would say. Well, time to get back in, all right? It just hit a bottom. That's major support. This is where all the institutions are buying right here, all the big banks, and they're never wrong. So you've got to do what they want to do. And, you know, we saw that earnings estimate come out, very positive. So this is making us some type of bottom. Most likely we're going to be making new highs, all right? Sound familiar? This is the way most traders make their trading decisions, based off someone or something else. But what is the market telling you? Well, strategy 4, click it on, click on signal arrow. And the market's telling us we are still below the 50. So any bounce is a selling opportunity, not a buying opportunity, because we're still below the 50. We close in the bottom 25% range. It met the remaining requirements. So this is a sell signal. It's a selling opportunity. Don't get caught up in thinking at what someone or something is telling you. What is the market telling you? The most important thing, and the only thing, in my opinion, you should be listening to. Not even me. You should be listening to the market. And look what happened. What happened to the institutions buying this and saying it's not going to go any lower? Everything you need to know is right in front of you. The only problem is we never look at that. We always listen or look at something else. Okay, let's look at another currency pair. This is the Euro British pound in a downtrend, right? Click on strategy 4. Click on signal arrow. Actually not. We must be above the 50. We close in the top 25% of these bars here. 370 pips in the next couple of weeks. That's over $3,500 per unit. Okay, let's recap what we shared with you today. Remember, strategy 4 is a pattern recognition strategy. It doesn't base any of the signals off of news, off of earnings, off of support resistance, off of moving average crossovers. It doesn't believe in that. It's a pattern that repeats itself over and over again in any market and in any time frame. designed for traders looking to catch momentum. As you saw, many times immediately after a signal was generated, the momentum kicked in. The beauty is oftentimes you don't see any signs of momentum once a signal has been generated. So a lot of people are out of the market, they're not doing anything. But if you're a strategy 4 trader, you know that momentum is building up in a certain direction because this pattern is identifying it, so you can get in before everyone else has gotten into the trade. You can apply it to all markets and time frames. I share different time frames, different markets. You can trade it going straight up or straight down. If you don't like to go short, well, you can use it as an exiting tool as well. Let's say you're long a certain stock and you get a sell signal. Well, you don't have to short the signal. You can actually just use it to exit your position. And the advantages, as we just saw, it's extremely consistent, oftentimes able to recoup the loss on the very next setup. It makes you a part of the process because you are deciding for yourself by what we provide you in the course, how you want to enter, how you want to exit, how you want to place your stop. And it's designed to be as simple as possible. You saw how simple those first 2 rules are. The remaining 2 rules are just as simple, okay? I just apologize. I can't give you a free meal. I can give you an appetizer, but it wouldn't be fair. If we were in a restaurant, I owned a restaurant, and I gave you a full free meal, and all the people in the restaurant said, hey, wait a minute, I had to pay for this meal. Why is this guy getting a free one? So I can give you a free appetizer, though, and those are the first 2 rules of strategy 4. So ask yourself, after what I've shared with you today, do you think strategy 4 can help your trading for the remainder of 2025? Think of it. We only have 6 months left. Well, if you ask yourself honestly, I think your answer would be yes. So because of that, we have a great discounted offer for all of the people attending today. We're going to offer you our most consistent strategy, strategy number 4. You'll get instant course access, detailed instruction. You'll learn all the different variables for entries, exits, and stop placement. You'll get the automatic buy and sell arrows, the complete course rules that you can apply to any market and any time frame. Now, everything you saw today was displayed by applying our platform. You saw how simple it was, even though if someone knew the rules, you would have to, once again, plot the 50-period moving average, see where price is. Then you have to look for, see if bar is closing the top of 25 or bottom 25, divide the bar by 4. Then you have to construct the remaining 2 rules of the pattern. Well, guess what? Everything is one click away on the PTS Primo charting platform. We developed it that way to make it simple to auto-identify and auto-generate these signals. So here's what we're going to do. As you can see here, we're also going to include exit levels on our platform. So for example, CDNS, it had a valid strategy 4 sell signal. Now this is just one of the different sell strategies we teach, or I should say exiting strategies we teach on the platform. On our platform, it's as simple as, once again, clicking on strategy 4, but instead of clicking on signal arrow, now that we know where the signal is, we simply go down to range extension exits right here. And this is just one of the 6 or 7 different ways we teach you how to exit a trade. And what it does is it will automatically plot these 4 different levels. Now, if you're the type of trader who wants to get in and out quickly, you would obviously go short and exit right here, cover your short position right here for a quick trade. If you were more of a swing trader, you said, well, I like to stay in for a little bit longer for a nice swing trade, maybe less than a week or maybe a couple of weeks at most. Well, then you would use either exit level 2 or exit level 3. And if you wanted to get the most bang for your buck, then you would exit at level 4. But we always tell our students that, especially in the beginning, to exit your entire trade at exit level number 4, because usually that's where the trend will change. So let's see what happened. Let's say you decided to place it right here, and this is where you wanted to cover. Well, in about a week or 2, you made a nice 30-point gain. And look what happened right after that. The trend changed, and had you held on too long, you would have given back all your profits and most likely had a loss on your hand. Here's another example. Here's a buy signal on a weekly chart of ACN, okay? Strategy 4 buy signal. Same process applies. Click on strategy 4 in the drop-down menu. Now we click on range extension exits. And now we see these 4 levels again. Once again, it's up to you to decide. There's no right or wrong exit level. It's what makes you feel comfortable. If you don't like tying up your money overnight, then you won't use exit level number 4. If you just want to get in and out, maybe a bar or 2, then use exit level number 1. Some of our students will use all 4. Let's say you had 400 shares. Well, you'd sell 100 shares here, next 100 here, the third here and get out of your position entirely. Still, other traders would say, okay, when we get to the first exit level, I'll move my stop wherever it is to unchanged where I bought. If we get up to the second level, I'll move it to this first exit level and just trail it until you finally get up to the fourth level, and then you'll exit everything. There are a number of ways to trade it. None of them is better than the other. What matters the most is what the type of exit strategy that you're going to be using that makes you feel the most comfortable. Remember, our job as a mentor is not to tell you, well, you have to sell here, you have to buy here. That's a system, and we don't believe in that. The entire industry, think of it, is based on that concept where, I tell you where to buy, I tell you where to sell. And if that works so well, why is it estimated that 80 to 85% of all traders fail? It's because that doesn't work. I know, because that's the way I was trained, and it didn't work for me my first 2 years of trading. I couldn't make a dime. It wasn't until I started to trade what made me feel comfortable that I started to become consistent. So we teach you all these different ways. This is just one of the different exit strategies we teach. Let's say you wanted to get out at the fourth and final one. Well, look what happened. In roughly 1, 2, 3, 4, 5 days, you exited with a 37% profit gain, or 37-point profit, I should say. And look what happened. The trend changed right after that. That's why we say, at least in the beginning when you're trading, to use the fourth and final exit as your exiting point. Now, guess what? That is on the platform that we're going to include in this special discounted price. So let's break it down. We're going to offer you the complete course and rules and manual, a nearly $700 value. Included with that, we'll have the free real-time PTS Primo charting platform, a nearly $900 value for 6 months. So if you purchase these separately, or if you purchase this, without the discount we're offering you, it costs you close to $1,600. Now, for some traders, that's not a lot, but we still feel that's way too much, especially if you're new to our presentation. So here's what we want to do. We want to discount that down and only charge you $695. So you get free real-time PTS Primo charts absolutely free, okay? Now, on the platform, you're just not going to get strategy 4. You're going to get a host of different tips and techniques, even strategies that come included on the platform that are yours, things that I've accumulated in my nearly 5 decades of trading you won't find anywhere else. These are trading things that I took from the floor. You won't find them on the major platforms. So remember, we've discounted this down from nearly $1,600 down to $695. You're going to save nearly $900. That's a 60% discount. This is a great, great way to become familiar with us and a great way to turn your trading around. Invest in yourself. We know you've invested in other things. You've spent thousands of dollars on these master systems that really aren't producing the type of results you were promised. Take a second to invest in yourself. Take your trading to the next level with Strategy 4. I use this every day in my own personal trading. I'm an intraday trader. That's the way I was taught when I was trading on the floor. So I use strategy number 4 on intraday charts for the E-mini futures. That's my market of choice. Does that mean you have to trade it that way? No, we have students around the world that use it on weekly charts of currency pairs. We have crypto traders that use it on daily bars of crypto. We have stock traders that use it on monthly bars. It makes absolutely no difference. It can be applied to any market, any time frame. So invest in yourself. I know you started out the year probably thinking, well, by this time I'm going to have so much money. I'm going to have, by the end of the year, I'll have that dream vacation I always wanted to take, or I'll have that extra income I've been wanting. And I can honestly say that most of you are nowhere near the hopes and dreams you thought you'd have at the beginning. That's okay. Remember, 80 to 85% of all traders ultimately fail. Take your trading to the next level. Invest in yourself with strategy number 4. Hopefully you can turn your trading around. Here's how to take charge of this. Contact Pro Trader Strategies. They are my sister site. They're in charge of the tech support with the platform. They're also in charge of the discounts and the pricing. They're very flexible. They would be very happy to work with you. If $695 is still a little bit too difficult for you to come up with, I would give them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to either answer any questions you may have about pricing or about the platform or about data, anything of that nature, okay? Now, that link you see it below the phone number is the link that will take you to the info page. You can also sign up online if you'd like. It's not a live link, but if you go to the chat box, that little chat icon there in your Zoom platform, you'll see that if you click down that chat icon, they have posted a live link. So you can just click that on and a browser will open automatically for you, okay? Now, I'm going to leave this information up here. If you have any questions, now's the time to ask me. Just go to your question and answer box or your chat box, and I will answer them to the best of my ability, okay? I see we have one here. It says, for an arrow to show up, does the candle have to cross the 50-period simple moving average? Otherwise, does the arrow just show up on random candles? Well, no. The arrow will only show, first of all, if all 4 rules of strategy number 4 are met. It doesn't just show up because it's closed above the 50. It is showing you that that is a valid strategy number 4 signal. And in order for you to get a strategy number 4 signal, all 4 rules must be met, okay? Now, 2 of those rules are what I first share with you. You have to have the bar close above the 50. And on top of that, that bar must also close in the top 25% of its range. Now, I know it may be a little misleading because I only could share with you those 2 rules, and you still need 2 more requirements to be met in order for that arrow to be ultimately displayed, okay? The good news is we teach you exactly what to look for. This is not a black box where you have no idea what it's based off of. You will learn all of the rules in the Strategy 4 course. You'll learn the remaining 2 rules. And then what we do is we want our students to try and identify signals on their own. And that's the beauty of the platform. Let's say you thought you saw a signal in XYZ, a buy signal. Well, all you would do then to check your work is click on strategy number 4 tab, click on signal arrow, and if you're right, you will see a green arrow there. Now, if there's no green arrow there, well, then ultimately you didn't properly identify a strategy 4 signal. So you have to go back to the drawing board. But that's the beauty of it. My goal is ultimately to get you where I am right now, since I've been trading this for so long. I can look at a chart and I automatically can say, oh, that's a strategy 4 buy signal. That's a strategy 4 sell signal. Makes no difference what time frame, what market. I want to get all of my students to that point so that no matter where you are, no matter what chart platform you're looking at, you will know exactly where a signal is generated and you can make your own decision trading. That's where I want to get you to the point, okay? So good question, but you need all 4 remaining rules of the strategy to be met and before a up arrow can be generated, okay? Any more questions? Remember, just go to the chat box or go to the question and answer box. I will answer them. Does this strategy need to be updated or recalibrated every year? No. I have traded the exact same rules for now almost 50 years, so we haven't changed anything since. So that's how consistent it is. So no, we will not. It's not. I know some other companies do that where they say we've upgraded the strategy 4 or whatever they teach you, and now it's even better. Well, we don't believe in that. If it's good enough from the beginning, it should be as well. We don't want to recalibrate it and rechange it, okay? Are there other costs included in other questions like subscription fees, data, or performance fees? No. Now remember, this is a 6-month fee for the platform. So you will have the choice of upgrading and getting the platform for another 6 months or a year. Most of the people that get this offer, they subscribe once their 6 months are over for a number of years because they see how powerful the platform is and how simple it is. But in terms of strategy number 4, no, once you purchase this, you have all the rules. You know exactly what it is. There's nothing that a subscription cost or fee because strategy 4 rules need to be upgraded or something. Remember, once you have the rules, they're yours. That's it. So the only thing you would be upgraded to would be getting more time for the platform. And as I said earlier, all of the trading consultants at Pro Trader Strategies are willing to work with you. They're very flexible. And so if you're already a customer that have purchased something or have had 6 months of the platform, they're willing to work with you and give you another deal or a discount, okay? The last question is, what if I haven't been trading long enough? I don't usually trade like this. Well, one of the things we offer is what we call educational correspondence. Now, this is, in my opinion, the next best thing to having me sit next to you. Each and every one of my students, regardless of how long you've been trading, we have hedge fund traders. We also have people that have only been trading for a couple of weeks, but you all get my private email address. And if for any time you have a question, I don't care what it is and how silly you think it may be, your email will go directly to me. It doesn't go to a sales consultant. It doesn't go to an intern. It doesn't go to my assistant. I don't have an assistant. It will come right to me and I will answer it as quickly as possible. So you can, any of my students can email me during the market hours, during the weekends, after the close, before the opening. It makes no difference and I'll get back to you. So if you ever have any difficulty, something doesn't make sense, I can check your work. You can send me a snapshot, or I can just review the things you're looking at to see how well you've progressed or not. So it's the next best thing, as I said, for me flying out to wherever you are. We have students that email me in Europe, in Australia, all over the world. So I can answer as quickly as possible that way, okay? Great questions, great questions. Any more before we close here? Okay, if there are no further questions, I just want to really thank you for taking time out of your Wednesday to come hear me speak about my favorite strategy, the first strategy I ever learned, and the strategy I continue to use to this day. Remember, don't worry if you happen to come up with a question once we've concluded today's class. That's the phone number. I would just write that down for Pro Trader Strategies. They can answer any question you may have at 310-598-6677. They're very flexible. They can take your order over the phone if you like, or they can even talk about payment plans if you'd like. But give them a call and they'd be happy to work with you, okay? As we close and take just one last look at our disclaimer, I would like to say thank you once again for taking time out of your Wednesday. I know you're busy. I know you have other things to do, and I just really hope you learned something. I just want to say I really hope you see how simple trading can be and how you can make yourself a consistent trader if you really invest in yourself for the first time. And I want to be right there with you every step of the way, helping you to become a consistent trader, okay? Thank you so much for attending today. I wish you all the best of luck in trading, but most especially, I look forward to all of you becoming students of mine in the Strategy Number 4 course. Thank you so much. I'll see you next time. Bye-bye.